In the outside world, it's good to be weird, but in real estate, especially with high-end home, not good to be weird at all. So I know I've lost money in real estate deals. How about you, Eddie? Have you ever lost money?
I don't exactly track it that close, but yeah.
Finally, you admit to something true.
Short answer would be yes.
Okay, so today we're going to talk about the deals that cause us to lose money. Hopefully that will save you from losing money. So not in any particular order of importance or anything, do you agree? But rather just the list of things that cause us to lose money and, other friends that we know of.
Yeah, let me set a little basis though. I don't want everybody to think I lose money on every deal. It hurts my image. I'm between 1,700 and 1,800 houses purchased over a 23-year span. I think I can honestly say I've lost money on, less than 20. If I had to throw a dart, it's probably 10 to 12 to 13 houses that I've lost money on. And I can just go from my brain between my ears and tell you what those leading reasons are, because they kind of recur,
All right. Well, thanks for that clarification. Obviously, you're here 20 years later, so I'm glad you didn't lose money on every deal. What is those things anyway? Every time we lose money,
it's deflating. It's not only hurts the bank account, it hurts your psychological approach to the business the next day. You do all of this work for could be months and months and months, and then at the end you're upside down on the deal, and it's just deflating.
Yeah, and thank you for being my mentor when I started, because I following your footsteps helped me to also avoid losing money.
I would agree with that. Having me on your side definitely helped you.
So anyway, let's talk about reason number one, why investors lose money, or why we lost money on these deals.
Yeah, one of the ones that's come up time and time again, and I still see young investors fall into this trap. The example is it's a higher end house. It's way above the median price point. It's big. It's weird floor plan. It's just weird. And what I have learned is on the upper end, weird don't sell. Strange don't sell. And you may think it's worth X, but it's really worth 70% of X or 80% of X because of the weird factor.
So when you say upper end, let's just define what upper end means. Are we talking about 300 and up or more?
I'm going to say in the Houston market, certainly 500 and up, but probably 400K and up ARV. You start to, qualify as the upper end. You're above the median price and the average price at that point. And,
okay.
And that's what I would classify it.
So we got high-end homes, value of $400,000 and above, that has weird floor plans or weird something.
Weird something. Weird
okay.
Floor plan, design, add-ons, funkiness. Got maybe a contemporary look, traditional look. Down here in South Texas sells better than a contemporary look most of the time.
Yeah, so in the outside world, it's good to be weird, but in real estate, especially with high-end home, not good to be weird at all.
That's right. I would agree with that.
How about, would you classify being on a busy street as weird or next to a railroad track as weird?
I wouldn't really call those weird, but they do impact. A house, and let's just take an example here in North Houston in Oak Forest area, very upscale area. Ella Drive runs right through the middle of it, and those cars are just buzzing down through there 60, 70 miles an hour, and investors that hadn't had that sting before of making that mistake will use the same ARV for Ella Drive as they do 2 streets into the neighborhood, and it don't work that way. They'd severely downgrade for residential on a busy street. Railroad tracks too, but you run into that busy street a lot.
Yeah, you just remind me, speaking of weird, I mean, I did have a house that has a pentagon shape. and I thought I was gonna hit a home run with that house. I ended up losing money on it.